Hello and welcome everybody to today's presentation. My name is Patrick Hagen. I'm a Regional Business Development Manager with the Entrust Group. And today we're going to talk about a multitude of things, but primarily we're going to talk about the difference between a rollover and a transfer, what it takes to set up a self-directed IRA, fund that account with existing retirement plan funds, and then potentially make an investment into an alternative investment. So this is an open forum today. We do have a schedule, some presentation slides that I'm going to go through. But if you have any questions throughout this presentation, go ahead and chat those questions to me. You should see a chat box in the bottom left corner of your screen. Those messages go directly to me. I'll read them aloud when time permits and then provide an answer. And this, like I said, is an open forum. So any questions you have about anything self-directed, go ahead and type those in, and I'd be more than happy to answer them during our call today. I'm going to try to keep it to about 45 minutes to an hour, depending on the number of questions. We'll see what we can get through. Again, my name is Patrick Hagen. I'm with the Entrust Group. I've been with the firm for over a decade. I'm currently a Regional Business Development Manager. I have an office in Raleigh, North Carolina, and an office in St. Louis, Missouri. Going to get into it. The first thing we'd like to do is read a disclaimer. As with any presentation we do at the Entrust Group, we want to make it clear that we do not provide investment advice or endorse any products. All information and materials for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. The Entrust Group is a unique business. We are in an industry called the self-directed IRA industry. This is what we've done now for over 3 decades, is focus exclusively on administering and record-keeping accounts that are self-directed. Self-directed is a descriptive term. It defines the way that we hold the accounts that we have for our clients to set up accounts with us. And essentially what it means is our clients choose the investments that they're going to hold within their retirement plan. We simply facilitate and hold those investments for them. So this is a little bit different than what you would have with a bank or a brokerage firm, where the bank or brokerage firm would provide you with investment advice, potentially sell you products, tell you what to do with your money. With a self-directed account, you're in control of your money. We're simply the record keeper that facilitates what you tell us to do when you tell us to do it. I'm going to ask if I could turn up the volume a little bit. I'm going to try to turn up the volume. I don't know if that'll work. I'm also going to move the microphone a little bit closer to my mouth and see if that potentially helps the problem. If it doesn't, Caroline, let me know if that doesn't get any louder, and I can pick up the headset or try another method here. So I apologize if you're having trouble hearing me. Hopefully that's a little bit better now. So going back to the Entrust Group, we started in 1981, so we have over 3 decades of experience. We're a high-volume business. We do a lot of transactions. We can do anywhere from 12 to 16,000 transactions a month, and we currently administer over $2.2 billion in investor assets. So in the scope of the self-directed IRA industry, we are one of the larger companies that do what we do. If you were to compare us to like Fidelity or Vanguard, a big brokerage firm, obviously 2.2 doesn't sound like a lot, but compared to the other self-directed IRA providers out there, in an industry that is not nearly as large as the bank and brokerage firm industry, we are one of the bigger players in the space and have been now for over 3 decades. We kind of pride ourselves in being educators. As a self-directed provider, we cannot tell people what to do with their money, but we can certainly tell them how the self-directed IRA works. So we can tell them what the rules and regulations are. Oh, it looks like people can't hear me. Hold on one second. Let me try another technique here. Perhaps that's a little bit better. Is that volume better for everybody? Caroline, maybe you can type in and let me know if that's a better volume. I'm going to go ahead and continue. I'll try to talk a little bit louder, and hopefully everybody can hear me okay. I apologize for the issues with the phone. I was on a headset. I took the headset off now, so I think that should probably be better going forward. So going back to the Entrust Group, we kind of pride ourselves as educators. We have a very knowledgeable staff. A lot of our eligible staff, actually all of our eligible staff that could sit for the CISP designation have earned that designation. We teach CE classes. We give presentations. We do webinars. We also have a couple of offices spread throughout the country so that we can do live in-person events and give presentations face-to-face. So if you have questions, again, we cannot tell you what to do with your self-directed funds, but we can certainly tell you how this works, answer any questions you have, and we understand that if you're not comfortable with how this entire process is put together, that you're probably not going to move forward. So we've staffed our company with people that know what they're doing, that can answer these questions, and we definitely encourage you to call us or email us if you have any questions. The agenda today is pretty simple. We're going to start with the benefits of self-directed retirement plans, define what a self-directed retirement plan is and some of the benefits of these plans. We're going to talk about the different investment options. The primary point today was the difference between transfer and rollover. It's actually a fairly simple distinction to make, but we will cover what the difference is between a transfer and a rollover, and that second step in the equation where you're moving money to us, how that's actually physically done. And then we'll talk a little bit about buying real estate within a self-directed IRA, which is a very popular asset that our clients hold with us. And then we'll talk about how to get started and obviously the Q&A. I think the Q&A is probably the most valuable portion of the presentation. So again, if you have questions about anything, type those in. I'd be more than happy to take the time to answer them before we finish up today. The benefits of self-direction. Again, self-directed is a descriptive term. It basically defines the IRAs that we hold. At the core, we hold IRAs just like any other IRA provider. If you have a traditional IRA with another provider, you will open a traditional IRA with us. If you have a Roth, you'll open a Roth with us. The distinction here is that once you move the money to us, we don't tell you what to do. We don't sell you any products. We don't make any investment decisions for you. Instead, we let you make the investment decision, and we are more of a facilitator than we are an advisory firm. So you're in control. We take orders. I joke with people that we are educated, responsive order takers. You're telling us what to do. We do the paperwork to facilitate that specific transaction on your behalf. Now, the benefit of this is that you can invest in anything the IRS allows, which includes things like real estate and private placements, private notes, and precious metals. These are investments that are perfectly acceptable from an IRS perspective, but you generally cannot hold through your standard bank or brokerage firm. So what it allows for is a higher degree of diversification. Instead of strictly investing in mutual funds, stocks, and ETFs, you can take some of that money and shift it into alternative assets. And what that allows you to do is invest in what we consider to be non-correlated investments. If you make an investment in a rental property that's cash flowing and bringing in income, it doesn't really matter if the Dow Jones is going up or down or sideways because your rental property is separate from what's going on with the stock market. So it also allows you to invest in things that you know and understand. A lot of our clients are pretty seasoned real estate investors or maybe have experience buying private equity, that type of thing. And it allows them to take their IRA, their tax-deferred retirement funds, and put it into something that they know and understand. So if you want to pay somebody like a brokerage firm to invest for you, that's fine. There's plenty of companies you can choose from. If you want to take control of your own money and invest in what you want to invest in, this is a good vehicle for you to use. The benefits of an IRA are going to be the same with the self-directed plan as they would be with any other IRA. By that I mean you have tax-deferred growth. Within a Roth IRA, you have tax-deferred growth that if you take it out as a qualified distribution, you have tax-free withdrawals. So that's going to be the same with us investing in alternative assets as it would be with any other IRA provider. As far as different investment options that you could hold within a retirement plan, we really have seen just an array of different things. In our 34 years of doing this, we've seen all kinds of unique investments. But what I generally see day in and day out is one of four things. I see real estate, private placements, private notes, precious metals. Real estate could be anything from land to a condo, commercial property, single-family residence, duplex, fourplex, whatever. Private placement is a stock investment in a company that's not publicly traded. That could be a small joint venture, a Reg D private placement offering, a couple of people putting money into an LLC. We consider all that private placement investing. Private notes is when one person has money that they're lending to another person or they're lending to a company. So the IRA could be a bank or be a lender and could lend money out and get a return on that loan. And then precious metals. We have a very vibrant precious metal program now. We've got a division of our company that focuses exclusively on precious metals. And we have a lot of clients that buy gold, silver, platinum, and palladium. These are just a few examples of things that you can do within a self-directed IRA. And again, I've seen a lot of unique investments, but a lot of times they fall into one of four categories. But if you have something you're looking to invest in, there's really only two restrictions that the IRS has, and that's collectibles and life insurance. I guess you could throw in an S-Corp as well. That's more of an S-Corp rule, not an IRA rule, but because it applies to an IRA, we put it on the slide. But you cannot invest your IRA into a collectible item. That could be a work of art, antiques, rugs, stamps, gems, coins, alcohol. Those are all considered collectibles and are deemed impermissible investments for an IRA to hold. Life insurance is also something that the IRS does not want you to wrap into a retirement plan. The deal with the S-Corp is an S-Corp can't be owned by an IRA. So by virtue of that, as an IRA provider, we cannot facilitate an investment from an IRA into the LLC or into an S corp. Excuse me. But short of that, you can do any investment that you want through a self-directed IRA. So we've had clients buy real estate, private placements, private notes, and precious metals. We've also had clients buy farmland and trees and racehorses and all kinds of different things that you maybe wouldn't consider for a retirement plan. But if it's not life insurance and it's not collectibles and it's held as an investment for investment purposes, it likely is allowed within a retirement plan. So if you have questions about that, call us. We'd be happy to discuss it with you and make sure that what you're trying to do on the front end is going to work. Let's get to the substance of what we're going to talk about today, the difference between a transfer and a rollover. So before I state what the difference is, I want to clarify the 3 steps involved in the process of getting your funds from where they are now over to someone like Entrust and then invested into an alternative investment. First step would be to establish an account. That's a very simple application. You can get it from our website or contact your local office, get it from your BDM. They will email it to you. You can fill that out and either fax it, email it, or mail it to us. Once we get that and a copy of your driver's license, we'll establish a new individual retirement account. Second step then will be to get money into that account. Now you can always make a contribution to the IRA if you want, put in your annual contribution directly to the Entrust account. But most of our clients are moving money that they already have accumulated either in their IRA or their 401k, and they're shifting it over to the Entrust group. So what we want to talk about is the distinction between a transfer and a rollover. The most common thing that I see in moving funds from one company to another is a transfer. It's an IRA to IRA, custodian to custodian transfer. That's when the money's in a traditional IRA over here and you're moving it to a traditional IRA over there. Or it's in a Roth IRA currently and you're moving it to a Roth IRA with us. The benefit of doing it as a transfer is it's a non-reportable, non-taxable event. So literally there's no limit to how many transfers you can do. It doesn't kick off any kind of reporting. The IRS isn't even aware that it's taking place. So if I move money from Fidelity to Vanguard, Vanguard to Schwab, Schwab to Entrust, I can do that all day long. There's no limit, no reporting, no issues. It's custodian to custodian, IRA to IRA transfer of funds. Typically the transfers that we see are cash transfers. The money comes to us in cash and then is invested into an alternative investment. But it's non-taxable, non-reportable, very clean. Now, one asterisk by the transfer process is transfers can take a little bit of time, and the time is going to be determined by the company that's sending us the money, not necessarily by the Entrust group. So if we send paperwork to a contra firm and they take 7 days to send us the money, then unfortunately we just have to wait for that money to come over. So as you're planning through this process, from start to finish, you're going to want to make sure that you gauge enough time to get the money pulled from wherever it's coming from over to us in advance of having us send it back out. The other way to get money over to us would be a rollover. Now, there's 2 different types of rollovers. There's direct rollovers and indirect rollovers. A direct rollover would be when you have funds in a qualified plan that you're rolling them over to an IRA. So maybe you have a 401k through your job, and you leave the job. Once you leave that job, that's considered a triggering event. You can then roll those funds to an IRA with the company of your choice. Or if you had an old 403B or a 457 or whatever type of plan you had, once you leave that or terminate that, you can then roll that out to an individual retirement account with any custodian or any provider that you like. In this case, it's not reportable, or it's not taxable, but it is reportable. The company that's sending the funds will generally report that they sent the funds. The company receiving the funds will report on a Form 5498 that we received those funds, and it washes out. There's no tax implications. An indirect rollover is a little bit different. That's when the current either IRA or qualified plan provider sends the money instead of to us directly, they'll send it to you. And then you have 60 days, 60 calendar days to turn around and send that same amount of money back into an IRA with us or another IRA provider. So it becomes reportable. The firm that released the money reports that they sent you the money, but then the firm that receives the money, in this case Entrust, would report that we receive the same amount of money, and it ends up being a wash on your personal tax return at the end of the year. There's a 1099-R on the front side and a 5498 on the back side. As long as that all happens within 60 days, it's a wash. Now, one note about the rollover is that it can only happen one time in a 12-month period of time. So if you take money today out of your IRA, take possession of it, then within 60 days put it back into an IRA, you would have to wait 1 full year before you could do that again. Now, this is a clarification that the IRS provided. It went into effect at the beginning of this year. In the past, it was thought that maybe it was per chunk or maybe per IRA, but now it's very clear that as a taxpayer, you're allowed to do an indirect rollover one time in a 12-month period of time. So taking possession of the funds, having them at your disposal, rolling them back into an IRA, that can happen one time in a 12-month period of time. Again, we kind of talked about the direct rollover. A lot of people have money in an old qualified plan. It could be a 401k, 403b, 457. Once you leave that job, you can roll the funds out to an IRA with whatever company you like, and if you want to self-direct it, you can roll it to an account with us and then self-direct the funds. If you currently work for a company and you have a 401k, a 403b, or a 457, you can inquire to see if they allow for what's called an in-service distribution. Some companies allow it, some do not. Every plan is different. It's governed by the plan document. Sometimes they allow participants to move funds freely out to an IRA while they're still employed. Sometimes they don't. So the best you can do is ask your HR department, tell them what you want to do, tell them you want to roll money out to an IRA, see if they allow for that or if they don't allow for that. There's no blanket answer to that question because every plan is a little bit different. Some allow it and some don't. But if it's an old plan, once you leave that job, whether you're fired or you left on your own accord or whatever the case may be, that's called a triggering event. Once you leave that job, then you're free to roll the money out to whomever you like, and including us. So how do you invest once you get the money over to us? We're going to talk specifically about investing in real estate, but this is actually applicable to any investment. The process is going to be very similar. The first two steps I've covered. You set up an account, you shift over money to the account. The third step is to tell us what you want to do with the funds. Now, my experience is our clients generally know or have a pretty good idea of what they want to do with the money before it ever comes over to us. So it's pretty rare for somebody to set up an account, roll over money, and then go out and try to find alternative investments. Most of our clients know what they want to do, and they're basically just using us, the vehicle, to do it. So once this account's set up, the money comes over to us, and we have it there at our disposal. Now we need the client to tell us what to do. So in the example here, it's going to be a real estate transaction. That's the most popular thing that our clients hold is real estate. So they have the money with us. They have the title of their IRA because we have provided it to them. So if it's John Doe Investor, instead of putting John Doe Investor in a contract, he's going to put the Entrust Group. Those letters there, FBO, stand for the benefit of John Doe IRA number 12345. So the first thing he's going to do is he's going to open the account, get the funds in the account. Then he's going to go look for an investment, maybe contact a real estate professional, maybe look on his own, try to find something he thinks is going to be a good fit for the self-directed retirement plan. He's going to get the money into the account with a transfer, a rollover, direct rollover, or potentially contribution. Once he finds the property, he needs to get Entrust engaged so that we can start facilitating that purchase on behalf of the IRA. So again, we're not telling this investor, Mr. Doe here, what to do with his money. He's finding the investment. He's directing us as the IRA administrator to facilitate that purchase, to get involved with him, the title company, and the real estate professional so that we can basically take it from offer to contract to closing to deed. So we get a contract. It's in the name of the Entrust Group, FBO, client name, IRA, etc. We also get a form. It's called a bi-direction letter. It's a pretty simple, straightforward form. It basically explains to us what the client is buying. It gives us all the pertinent information. In the case of real estate, it's the property address, the title company that's going to handle the closing, whether or not there's any earnest deposit required. Sometimes the legal descriptions on there, like the parcel number, to tell us how to send out the earnest deposit money, and then who we need to work with to actually close out the investment. In most of the deals that we see, there's some good faith deposit. Could be $1,000, could be $5,000. It varies depending on the deal. But that good faith deposit is going to come through the IRA. Entrust is going to send that out on behalf of the IRA. The bi-directional letter tells us what you're doing, gives us all the details, and then we facilitate it all the way through to closing. You do all your standard inspections, your due diligence. You work with the title company to make sure all the documents are prepped properly. The title company is actually going to send the package to us, and then we're going to turn around and send it to the client. Because in this case with Mr. John Doe, we don't necessarily know what the closing costs were supposed to be, what the realtor commissions were supposed to be. We don't really know much about anything other than the fact that he's directed us to get involved on this closing. So before we sign anything in the way of closing documents, we're going to ask for him to review it. And the way we typically do this now is we load everything into DocuSign, send it out to the client agrees, they sign electronically and send it back. If you want to do it with an actual paper printout copy, you could write the words read and approved on the contract or on the deed or whatever the case may be and send that back to us. But most of our clients now use the technology that we have and do a DocuSign document, which makes it a lot cleaner and a little bit quicker as well. So once we get all the package from the title company, everything's in good order from our perspective, titled correctly, etc. Client has approved everything. At that point then, we sign the documents, send them back to the title company, and wire out the funds. So that from start to finish, it would be offer, contract, earnest deposit, due diligence, closing, and then deed. And all of that is controlled by the client, directed by the client, but facilitated by the Entrust Group. If you really want to put it in simple terms, we need to be involved in anything from a paperwork standpoint and a funding standpoint. The money and the documentation has to flow through us, but all at the direction of the client. I'm going to leave a good chunk of time here for some questions, but I want to summarize a couple of things I've touched on so far. We've talked about some of the benefits of self-directed retirement plans, the things you can do with a self-directed retirement plan that you can't necessarily do with a bank or a brokerage firm. You invest in pretty much anything, the only restrictions being life insurance, collectibles, and S-Corps. Anything that's an investment held for investment purposes that's not life insurance, collectibles, or an S-Corp is a viable investment for a self-directed plan. We talked about the difference between a transfer or rollover and a direct rollover. Again, if you wanted to discuss your particular situation, I would encourage having you call either one of our regional offices or call up our corporate headquarters and speak to someone in customer service. We have a lot of people on staff that can explain the difference based on your situation, whether you're going to do a transfer, a rollover, or a direct rollover, and the timing associated with each. And timing is important because, again, a transfer, in our experience, is typically about 5 to 7 business days. An indirect rollover could be a lot quicker in some situations. A direct rollover really is contingent on the company that's sending us the money. So if I was to gauge from a timing perspective, an indirect rollover is probably the quickest option, although it's reportable and you can only do it once. A transfer is probably the second quickest option. It's by far the cleanest option. A direct rollover, in my experience, takes the most amount of time because you're talking about an old qualified plan. They're going to have their own plan documents that need to be completed. You submit it to them. They typically issue the funds out by check instead of a wire. It's all just part of what slows things down a little bit. So make sure that you plan accordingly. You have ample time to get the money into the account well in advance of needing it for whatever investment you decide you want to make. Then we talked briefly about the process of investing in real estate. We didn't really talk about other investments like private placements, private notes, or precious metals, but essentially it's the same general premise. You're going to set up an account, move over the money, direct us to process the investment. The only distinction with something non-real estate is instead of buying real estate and sending us a copy of the closing documents, you're maybe buying into an LLC, in which case you send us the LLC documents, or you're buying into a private placement, in which case we get the subscription agreement. So it's really just the documentation that backs up the investment is the only distinction. Talked about the 3 easy steps: open an account, fund the account, purchase the asset. This at its core is what we do day in and day out. Obviously, each step has paperwork and timing associated with it, but this is what our regional BDMs and BDMs in the field, as well as our customer service team in Oakland, can assist with, is getting this account set up, getting your money moved over, and getting the assets purchased. We're running a special right now. We typically charge $50 to open an account. Basically, 3 out of the 4 quarters of the year, the $50 is set. We charge that for all clients to set up their account. But in the first quarter, we do a special where we waive the $50 account opening fee. Now, the only thing that we require is that there's some kind of movement of funds coming into the account, and that's either going to be a transfer or a rollover that's associated with the new account. So if you plan on moving money to a self-directed IRA and you've looked at all of our competitors and decide you want to work with the Entrust Group, if you think this is something you want to do, now would be a good time to do it. You can do it up till the end of tax season, so middle of April. You can set up the account with no cost. We'll waive the $50. All you need to do is include a transfer or a rollover with the account application, and we'll waive what would normally be a $50 account setup fee. It's also important to note that if you have multiple accounts, maybe a husband and a wife are both opening an account, or if you and a couple of your friends are all opening accounts, this applies to each account. So we'll waive the $50 setup cost for each account that is being established that's moving funds either through a transfer, a rollover, or a direct rollover. Got a lot of questions that have come in. I want to bring up the question here and the hashtag AskEntrust. If you have the time to ask a question today, it's great. One of the benefits of being on the call is that we can provide Q&A time. But we are available pretty much any time. You can go to hashtag AskEntrust and type in a question, or you can call our Oakland office or a regional office, and we'd be more than happy to spend some time with you to make sure that you understand how the self-directed IRA works. Because at the end of the day, we know that if people don't understand how it works, they're probably not going to move forward. And our company and our industry is really geared towards giving people information so they can understand it, and then facilitating it through the end of the process if they decide they want to go through.